So I wanted to play this video from you for you from Kyle Bass, um, just recapping essentially what happened here with this, the yen carry trade that blew
Sure.
up.
Yeah.
I'll play it on. Do you mind if I play it on double speed just so it's not too tedious?
Sure.
Long.
To one of the big stories in the market, that is Japan. Its market, as you heard Bob talk about, is one of the main causes for the sell-off. And after a red-hot start to the year, Japan's stock market posting its worst day since October 20th, 1987. That sell-off triggering at least part of the global rout that we've seen over the past 24 hours. Kyle Bass, founder and CIO of Heyman Capital Management, warning investors about Japan's economy, specifically regarding its currency and the yen. Kyle, welcome. I feel like we got to stop doing this on nights like this. I'm going to go to Japan in just a second, but I want to follow up on what Steve was just hitting on. The bond market, the bullies of the bond market, they've already been pushing around interest rates. Is the bond market trying to do the work of the Federal Reserve right now?
There's a more technical answer to this, Brian. And late last year, you saw the way the government funds itself go from bonds to bills. I know that sounds like an arcane idea, but what that did is
Sorry?
It's a lot of alcohol in the background.
Quite a bit.
released another $2 trillion-ish of liquidity into the market going into the elections. And one can think that these bodies are apolitical, but I can tell you that knowing what's going on behind the scenes, I can tell you that there have been some political currents going on there. And therefore, now the cries for intermediate cuts are coming. Remember, back in...
So that's on the heels of what I was just saying. It doesn't matter what the central banks say; they are going to support the political regime. They need to make the whatever administration is there look good. And so he's saying that there could be cuts coming even before the next meeting for the Fed.
2000, Greenspan in mid-December announced that he was probably going to cut at their January meeting, and it forced him to cut 50 basis points intermeeting on January 3rd, 2001. So even if the Fed's not intending to cut, here's what happens. They say they don't care about the stock market, but every time one of them talks on television, they go watch what the stock market does as a result of them talking. And so if the stock market rolls over and high-end consumption collapses, which is likely to happen, then you have the whole economy rolling over because it's high-end consumption holding the economy up. And that would make the Harris win less likely. So I think you can expect some aggressive Fed cutting between now and the November election.
Okay, you went there, and it's...
which is why I love... I think Kim Carson makes this point that election years, at least in the last high inflation regime that the United States has had an average of 20% up on the stock market at the end of that year. And so I like betting on that.
So there's an interesting overlap in dates here where there are two rate cuts in front of us, which are scheduled at FOMC events, right? And by that I mean the rate cuts themselves aren't scheduled, the meetings are scheduled, but we anticipate that they're likely going to reduce rates. September 18th is the first. Right now, the futures market is stating that there's a 45% chance of a 25 basis point cut and a 54% chance of there being a 50 basis point cut. You're arguing that sometime between now and September 18th, prior to the actual meeting, there will be an emergency rate cut. And
if the market continues to go down.
If it continues to go down. Now, today's conversation is going to be interesting here because while we're on this call, I'm still under the impression that we're up against a pretty strong resistance zone in both the ES and NQ futures, the equities market in general. And I don't think we're going to sustain a rally. I think we're up against the other side of this retrace, and there could be a continuation from here. Let's assume for a moment that I'm right. We break a new low. When do you think the Fed would have to respond to that? And by what degree would they cut rates?
I think it's at least 50 basis points.
Agreed.
And I think it happens in September. So the next quarter, the weakness period is in September. Where the quarterly options end, so volatility would be not very well supplied. In fact, most stock market crashes happen in September, October,
right,
or
everyone's
February,
on vacation.
March.
Yep.
Right.
Okay.
And so if at that period that happens, I think we then get, literally like a day after or whatever, they come out and they say they have to cut 50 basis points in order to support. The reason they're going to give is going to be some sort of like events in the world that they're never going to say it's because the stock market is broken. They're going to say, or that the financial system is broken. They're going to say some other thing. So you have to wait for some sort of excuse. But I think September is where we see that drop. The drop and then the cut.
So we've got election day on November 5th, and then the next FOMC meeting on November 7th. And right now there's an 83% chance that they'll cut another 25 basis points. Now, if there's an emergency meeting between now and then, do you think there would be a follow-up
Yes.
emergency meeting if markets continue to decline?
No, not a follow-up. I think they'll telegraph, because half of the meeting, the Fed's strength is not really in the cutting of the rates, right? The cutting of the rates is affects the market's liquidity in the markets a year, 18 months after the cut actually occurs, like fully gets fed in there,
Mhm.
because it's affecting lenders and creditors and debtors. But their expectations-based policy, which is, I love when they say that, the expectation-based policy is that they're going to jawbone the market so that to cause people to be like, well, we're going to be supported. The Fed puts it there. We can go into the markets and we can make, if anything goes wrong, they're going to come in and save us. And that will be enough. So with the emergency rate cut, which will then also telegraph with whatever they're going to say, that we're going to support the markets no matter what, whatever version of what the Fed speak for that, that'll be the burst of liquidity. So they don't need to then do another emergency cut. But I think then at the meeting, they do cut.
Okay.
Because they're not going to want to do an emergency rate cut in between another set of meetings, so they would cut again. And I see no way at all that Kamala Harris can get on any stage or talk to anybody if the stock market is not up, because Donald Trump will be able to stay there and go, stock market was all-time highs before and after COVID.
I see your point.
And she can be there like, well, no, inflation's no, they're like, oh, inflation's coming down, yeah, but everything is still expensive, and our portfolios are down 10%, and we don't know what's going to happen in the future. There's no way.
Yeah. Yeah.
I mean, I just don't see how it could ever, especially since they can do something about it. And this is not, why would they ever not do that? So that to me seems like a no-brainer. I mean, it seems like the thing to bet on.
Yeah.
That the market's I think it has to be all-time highs before any debate happens, before any election occurs.